Welcome to FT Markets. Overnight, gold suffered a 5% plunge to its lowest level in over 5 years. Here to discuss what went on is Henry Sanderson, the FT's metals correspondent. Henry, if I'm a gold trader in London this morning, I've woken up with a bit of a nasty surprise. Gold's taken a really big tumble overnight in overseas markets. What do we know? What has happened?
Well, I think people are still trying to work out what in fact did happen. But what we know is that in the US futures exchange, the gold contract in the US, which is the largest futures contract, there was a significant fall overnight, almost $1 billion worth in a couple of minutes, which was traded, which pushed the price down on that exchange, which then pushed the price down in China on the Shanghai Gold Exchange, and then the global, what they call the over-the-counter gold price, which fell after that. So I think traders here are still trying to put the pieces together to work out, is this just based on fundamentals, a strong dollar, weak demand, or was it an attack by funds sensing an opportunity to drive the price down?
Okay, well let's say it was an attack by Chinese funds. What would have driven them to have done this? Is there any recent sort of data points that could explain why they would take such a bearish view and look to push gold down?
Well, I think we saw all the precious metals selling off a lot on Friday, and platinum was hit very hard. And we also saw reportings of China's gold holdings, which were less than the market expected. And on top of that, these funds in China on the ground can see that demand has not been great this year. And also the stock market crash has made people sell other assets such as gold to meet margin calls or to meet losses on equities.
Okay.
Yeah.
So China's been very important. I mean, if we look at a graph of the recent sort of gold price performance, I mean, we can sort of see that, you know, it sort of got up to its peak here, came back down, sort of a big collapse, but then we had some Chinese physical buying coming in supporting the price. But that Chinese physical sort of demand seems to not really be propping things up this year. I mean, is that fair? And are there other pressures weighing on gold? You mentioned the US dollar earlier on.
Mm-hmm. Yeah, precisely. In 2013, we saw a huge amount of Chinese buying, which they came in, they saw the price was low, it was a good time to buy, and that really pushed the price back up. But you're right, this year we just haven't seen that. And in India as well, which is the second biggest consumer, we haven't seen strong physical buying of gold. And I think in the West, if you tie that with what's gone on in the West, ETFs have seen big outflows from Western investors this year. So you've got weak physical demand in the two top consumers, you've got weak investor demand in the West, and then you've got, as you mentioned, the macro pressures of a strong US dollar, which is bad for gold, which is priced in dollars, and also comments from the Fed about the rate rise this year, which many analysts think will happen in September.
Okay, but if I'm a gold bug though, I would probably have been, you know, a couple of months ago feeling very positive about the metal. I mean, we had the problems with Greece going on more recently. We've had the Chinese sort of stock market rout. Gold's supposed to be a haven asset. It's supposed to do well in times of distress. But this year it looks like the dog that hasn't barked. What really explains why gold hasn't lived up to that haven status?
I think you're right, gold hasn't acted like a safe haven asset this year, despite Greece, despite the Chinese stock market woes. And I think really people say that gold this time is not the preferred safe haven asset. The Japanese yen has shown some of those characteristics.
So it's almost like it hasn't been the right sort of crisis for gold this time.
Precisely. Analysts are divided. Some say it hasn't been big enough crisis, and others say there's a lot of headline fatigue over Greece. You know, we've had, you know, constant deadlines that came and went. So there are many mixed views about why gold is not a safe haven asset anymore.
And I guess both of the crises we've had in Greece and China are deflationary rather than inflationary, which obviously usually plays to gold. So
that's right.
Gold
so we're also in an environment of falling oil prices. So it's not a very sort of inflationary environment at the moment. So that's also bad for gold. You typically buy gold when you think there's going to be a lot of inflation.
Henry, thanks very much.
Thank you.